Hey everyone, welcome back to my channel. This is part 5 of my volume price analysis series. This is going to be the last beginner to intermediate level video of the series, and then we'll get into the final parts, which will be much more advanced, and which I'm really excited about doing. In this video, we'll be covering market awareness with VIX, the primary sectors, and TradingView market net flow, I should say, as a bonus. Before we get started, if you'd like to get a 10% discount for TradingView, don't forget to use my referral link in the description. You'll also find referral links for TradingView or Top Step funded trader programs that will give us both discounts. Lastly, if you enjoyed this content, don't forget to like and subscribe to help me grow this channel. This is something I love doing and I'm very passionate about, and I have plenty more content coming in the near future. As I just mentioned, the content's going to keep getting more and more advanced to help evolve everyone as a trader, including myself. If you haven't already watched volume price analysis parts 1 through 4, make sure you watch those as well to fill in some blanks. So that being said, let's get into it. So market awareness is something we should constantly be reassessing throughout the day. It involves watching specific indices, sectors, ETFs, and options flow data live throughout the day to ensure the general direction confirms our thesis that we continually evolve as the day goes on. If we're trading SPY, QQQ, ES, or NQ, the instruments we observe are somewhat different than if we were trading underlying holdings and securities such as Apple, AMD, Nvidia, etc. So let's get right into what those instruments would look like. And so again, if we're trading SPY, ES, QQQ, NQ, the one of the very first things I'm constantly looking at throughout the day is the VIX. And the VIX is an index that measures the underlying volatility of the S&P 500, and there's a couple ways to use this. So, and we mentioned I want to state something right now. We've talked about how gamma exposure influences volatility throughout the day, and VIX and the gamma exposure go hand in hand with each other. For the sake of time, I'm not going to touch on gamma exposure again. I went through it pretty heavily in the last video, so make sure you check that out. That was volume price analysis part 4 for the reading price action portion. In this case, I want to focus on other things I use other than gamma exposure. So I will pull up the VIX here, and I mean, you can see it's nothing special. It's a chart. One thing to note right away, there is no volume. So we don't have volume profile. We don't have underlying volume. Again, it's just a measure of the underlying volatility. And it does kind of play a part in how implied volatility is calculated, and therefore how Vega and your options Greeks are going to affect the price. But there's one big thing a lot of people use this for now, and I want to state this is not a guarantee, and then again, nothing in the market is ever a guarantee, right? We just need to understand these concepts because they do often apply. They help give us an edge, but there is never a guarantee with anything you will learn about the market. If someone ever tells you they have a guaranteed winning strategy 100% of the time, they are straight out lying to your face. So let's say that we have so we're looking at the VIX, and one thing I want to point out, and I'll pull up SPY here, and so if you look, you may have already noticed that VIX runs counter to SPY typically. So when you see SPY going down, you see VIX going up. When you see VIX going down, you see SPY going up. And so those two things are pretty much always true. Now, the thing is that that's not really how VIX is meant to be used. VIX is used to be used to understand how volatile the S&P 500 is. So if you look over here at the price range we're in, 25, I mean, that's somewhat volatile. That's nothing crazy. We can actually zoom out a bit. I mean, you can see we've gotten, in recent times, we've gotten as high as 35. And the thing that happens when you get to these high price points on the VIX is we get those large price swings. So if you have the VIX really high and you have a lot of negative gamma exposure, again, check my last video if you're not sure what that is, you can expect the S&P 500 and the NASDAQ, SPY, QQQ to fluctuate, like, you know, in some cases, I mean, it was ridiculous getting like 3 to 5% moves in a single day. Now, as that volatility dies down, we get more stable movement, and then as that gamma exposure shifts positive, we can expect a move upward, and that's what's been happening lately. Now, I totally expect this to just be a temporary thing, and we'll go back to our normal volatile environment. But what I usually do, and this is true for all the things I'm mentioning today, is I'll have VIX up on the 5 minute, and I'll be watching, right? And I mark my levels, just like I do with SPY and QQQ. I'll have my levels, and if I see SPY holding a level at the same time VIX is holding a level in the opposite direction, that's usually a very good indication that I can take that play on SPY. And of course there's other factors that go into it, but it's a huge, it gives really good confirmation when you see them both holding the same level. And again, for me to take that play, that would mean VIX is hitting resistance at the same time that SPY is hitting what we would call support. And again, I mean, I don't want to get into all this stuff with high volume nodes, low volume nodes, things like that, but you could see we're failing to enter this high volume area, which it was also a level on SPY, and we start to move up on this candle. And if I see us moving down on VIX after hitting a level that I've priced out previously using higher time frames, unfortunately you do not have volume profile and things like that to help you with level plotting, so you'll have to base it off of just pure price action. But you get a very solid confirmation that that's a good time to enter calls or take a long. And then same sort of deal when VIX starts hitting under different levels, that's a good time to take profits or switch to puts, whatever it might be. And another thing, I do actually plot gamma levels on VIX. There's not as many as you would see on SPY and QQQ, of course, but they do indeed exist, and it's usually right at even amounts. So you have 25, 26, and you can see those act as more as a zone. You know, we didn't quite get there. It's kind of a zone between 25.90 and 26. It's like a 10-cent zone typically, not always, but typically 10 to 20 cent zone. So that is how I use VIX. So one, it helps me determine, okay, what kind of swings can we expect throughout the day? Is there going to be a lot of upward and downward movement with large percentage swings back and forth? Or in what direction should SPY be moving if it's actually respecting doing the opposite of the VIX, which is what we typically see. So that is how I use those VIX in particular. So the next one that I like to look at when I'm trading SPY and QQQ is the XLK tech sector. And again, this is another one I have up at all times. And this one I actually expect to move with SPY. So if you don't know, tech companies are a big part of SPY and QQQ. So the tech sector will help you determine how well SPY and QQQ is going to move. And so in this case, unlike VIX, if the tech sector is green, we want to see SPY green as well. If the tech sector is red or hitting a level, we expect to see the same thing on SPY. And you could see that works pretty perfectly here. And then we can even and you can even use, it's always good to watch SPY and QQQ together. What you'll notice here is I always have them up side by side. And QQQ is not purely just tech either. I mean, it's what QQQ, NASDAQ is actually more so growth stocks rather than tech stocks. That's one confusion a lot of people make. XLK actually is the tech sector, and a lot of the holdings on the XLK ETF are in both SPY and QQQ, even though it is actually centered around the S&P 500 technology sector. So this sector does indeed influence both of them, and so it is one that I'm always watching to make sure it's moving the same direction. And again, you don't have to get too crazy with plotting all the levels. I mean, it can help. Just know that if you're getting into puts on SPY, then you want to make sure that XLK is forming red candles or topside wicks or whatever it might be. It does have volume. Not that useful because a lot of people don't trade XLK directly. They trade the underlying holdings that are within XLK. And the same, but volume profile does actually help for determining levels. So you do have that, unlike VIX, you do actually have volume profile with XLK. So rolling right through it, let's get into the next sector, which will be the finance sector, which is XLF, and it's the same sort of thing. Now, the finance sector doesn't impact QQQ or NQ as much as it does SPY. There's a lot of big holdings on the S&P 500 that are tied to XLF, the finance sector. And again, it's the same sort of deal. When XLF is red, I expect to see SPY as red. When XLF is green or holding a level, I expect to see SPY doing the same thing. And you could see, and I hope this is starting to make sense because I'll tie it together shortly after I go over the final main sector I watch, but it helps us get not only confirmation on the move that we're taking to help us hold it. So like you get that extra, okay, I know that the sectors I'm watching are green, VIX is red, I'm in calls on SPY. It will help you hold through to the very next level. It will help you hold that position to get the most out of it without exiting early. And it will also give you a little extra confirmation to even enter that position in the first place. So XLF is a very important one. And then the last sector I consistently watch throughout the day when I'm trading SPY and QQQ is XLY. And the big one in here is Tesla, consumer discretionary. There are some other big holdings in there as well, but that's the one that like comes to mind when you see XLY. I always think Tesla. I mean, they move pretty much 1-to-1 with each other because Tesla is the big security, the big holdings under XLY. And again, there are some other things, and it's the same deal. We want to see this moving with SPY. So if XLY is red, I want to see SPY red. If it's green, I want to see SPY green. If it's holding a level, I want to see SPY holding a level, and vice versa. So that is those are the three main sectors I use, and I use those in conjunction with XLF. Now I don't sit there and flip through each one. What I prefer to do, and not all chart software can do this. Most can. Unfortunately, to do this in TradingView, you do have to pay for it. So if you do want to pay for TradingView and you want a discount, I have a referral link in the description that will actually get us both some money off of our subscription. But anyway, so if you look here, I have all four of them up at the same time. So I always have VIX, XLK, XLF, XLY, and I'm constantly peeking at them. I like just keeping them on the 5-minute, even if I'm trading 3-minute on SPY QQQ. And you can put them on the 3-minute. Actually, that's perfectly fine too. And what I'll do is I'll watch to make sure that, okay, if I'm entering a position, if I'm entering a long or buying a call on SPY, then I want to make sure that VIX is dropping at the same time XLF, XLK, and XLY is going up. And you can actually see we had that early in the day. So when on this past June 3rd, 2022, when it looked like SPY was holding this level, and we start to get this green candle, and I'd be thinking about an entry here because I took off all my levels for the sake of this video to keep it clean, but chances are a level would be here, and you can see in the volume profile we have the volume differences. So we start to see SPY holding this level, and quickly we want to peek at VIX and the three sectors, XLK, XLF, XLY, and if we see them all holding that same level, which we do, so VIX is red as they flip green, that's extra confirmation to enter, and you can hold. And then once you start seeing SPY starting to wick out here, because we're hitting a level up here, then it's a good time to exit. Especially you'll notice here you start seeing XLF, XLK, and XLY. XLY doesn't do it as much, but you start seeing XLK and XLF start wicking out as well, and that's your cue to get out. And you start to see some choppiness on VIX, where it looks like it's about to go back up, which would mean SPY traditionally will start going down. Plus we got to a major gamma level on VIX. And yes, I do plot gamma levels on all three sectors as well, if you were wondering. And then one thing I want to mention that's very interesting about VIX, and of course you can't always count on this stuff. Again, I just said you never could count on this 100% of the time, but I've always noticed, particularly with VIX, whenever we gap, so you can see right here, let me make this bigger. You can see this gap right here. So on VIX we gap down, which is very bullish for SPY. But that doesn't mean, if you're not already in, I mean, in reality you should have been in calls somewhere up here, right? Jumping in here is a pretty late move, and it's kind of scary because you're going right into a big level. But let's say you see this gap down, and normally you see gaps and it's like, oh man, like, are we gonna go retest that gap and then just run from there? Which is like you have your gap and go, or are we going to fill it? Well, VIX loves to fill gaps, and it's amazing how VIX is constantly filling. You can see another gap here filled, you can see a gap here that was filled, here it's constantly always filling its gaps, and it usually does it pretty quick. So when you see it gap down, that's a good indication. Okay, I can expect VIX to move up to fill that, which is actually bearish on SPY. So if I got in up here and I'm concerned about that gap fill, that's a good time to pull some of the positions off, to take some profits there. I'm not saying take everything off for a gap fill, because it is a small gap and you can see it does come down and resume, but it's just something to always keep in mind. If you see VIX gap, always have in your mind, okay, how is that going to affect my position if it fills? Now, the other thing is when you see large gaps at the beginning of the day, right? So like VIX opens up at 3 a.m. and you can see from its open previous day close at 4:15 p.m. Eastern, 3 a.m. Eastern, or 3:15 a.m. Eastern, sorry, or I think it's, yeah, it might be 3:15. I'd have to check, but when it opens and we see this gap, you can see it gapped above one of its main gamma levels and started going. This tells me that, okay, we're going to have some sort of bullishness, especially like as it moves up more and more and more, because VIX, that opening gap loves to fill. So you can see it eventually did fill here, and that in order to do that, that means VIX had to come down quite a bit to fill this gap. You can see it actually officially filled it finally by 2:30 Eastern that day. But that means if VIX is going to come down to fill this gap at some point off of some main level, we can expect some bullishness on SPY while VIX is dropping to fill that gap. So that's just another little pro tip you can look for throughout the day when you're doing your intraday scalping on SPY and QQQ, is VIX gaps. And of course you want to watch them with sectors to make sure that they're all moving in conjunction. You want to see the 3 sectors green at the same time you see VIX red if you're going into calls, and if you're going into puts, you want to see VIX red at the same time. If you're going into the puts, you want to see VIX green at the same time you see the other sectors red. And that will give you that extra confirmation, that market awareness. And a lot of times you'll catch trades that other traders will miss. And now, so one other great tool that I've been using recently is the market net flow from TradingView. So this tool is phenomenal, and there's a couple nuances I want to talk about. Doesn't really replace all the sector awareness I talked about, but it does give additional insight and help pick up big trades. So and I want to make sure people are using it properly. So market net flow is cumulative flow data for the entire market. So every holding is in the market. And I've talked to the creator of this tool, and he actually is eventually going to focus on underlying holdings of SPY, QQQ, and IWM, which I'm very excited about. But still, this is a great tool looking at the whole market as well. And there's a couple ways to use it. So if you come over here to the market dashboard and click options, you'll pull up the market options market summary, and you have market net flow. And you can see the type of strategies it talks about. So first, let's get into the data, what it's telling us. So we have, if I go to history here, I'm just looking at 1 day of cumulative data. And what's happening is when red is going up, so when puts are rising, that means that means there's put buying happening. When puts are selling, dropping, that means there's put selling happening. Now, put buying is bearish, put selling is bullish. And it's the same thing with the green bar, which is cumulative net premiums for calls. So if we see the green bar rising, the green line rising, that means there's a lot of call buying, which is bullish. And if we see it dropping, there's a lot of call selling, which is bearish. So right there, you can derive some information from that. Where if at the same time you see calls spike like this, and you see puts dropping, so put selling and call buying is happening across all of the instruments that are optionable across the entire market, that tells you that there's something very bullish happening. And that means you want to start off of a key level. Of course, you always want to be patient. You want to wait for a level hold, right? So this was at 945, and if we go here, we see this big move at right around 945, and so we still drop a bit when this happens, but sure enough, this can't be ignored. So even though price doesn't react immediately, you can start looking for that hold. So what happens is we see that happen, and then we get to a level here and we start to see it wicking out to hold. We check VIX in our sectors, and we see what we want to see for that time frame. meaning VIX dropping, sectors going green, that is fantastic confirmation to enter off of this level hold. And sure enough, the SPY does catch up and we start to move up pretty good, and then until we get some sort of choppiness, some sort of double top up here. But that's such a powerful way to use the tool. But also one big powerful strat, you can see it mentioned over here on the right, is what we call the market cross. So when net call premium cross above net put premium, that's a very bullish indication. And now here's the thing: if you're have a small account and you have to worry about the pattern day trading rule, I highly recommend switching to a cash account so you don't have to worry about that. But let's say like you were restricted by that, these net crosses that look like this are the times you want to get ready to enter calls. Like if you have a limited amount of trades you can do, look for these. And one nice thing is you can turn on notifications here, and what it will do, it will tell you throughout the day when you have crosses, when you have change in momentum, when you have I don't believe it tells trend breaks, but it will tell you when net premiums go above 0 or below 0, which can also be a bullish or bearish indication. Now, another big thing is, and I see a lot of people not doing this, and just like it's super important to zoom out and look at higher time frames on anything that you're trading, it's always super important to zoom out and on market net flow. And the reason for that, now I like to zoom out, I do look at all time frames, but I do typically, when I'm jumping around, I'll typically jump to the 3-day and then the 5-day. And the reason being, and it's loading in your browser, so it does take a second to show all that cumulative data. But the reason being is because, again, it's showing us cumulative net premiums for the period of time we've selected. So if I want to see, okay, on this day I'm looking at 1 day of cumulative net premiums and I see a market net cross, calls crossing above puts, yes, that's a bullish sign in the short term, but we want to know, is that a bullish sign in the long term? Meaning, is this going to change my overall mindset and trend direction? And the answer would be no, because if we zoom out to the 5-day, you can still see, despite that cross that we had on June 3rd, early morning June 3rd, which would be right around here where we got that bullish move. Despite that, and you can see a little spike in calls, but overall for the past 5 days, puts are still winning the day. So, and this is another really powerful way to use this tool, is to look at divergence, especially long-term divergence. So what I mean by that is you could see on SPY, we're moving up pretty good, right, throughout the day, and yet we still see puts overall. This is the 5-day period. Cumulative puts overall are increasing across the entire market, and calls are, yeah, they're increasing, but it's more so steady. So what that means is that this is a weak move up, and there's another way you can confirm that. If we go to the daily, and let me remove these drawings here, and let me hide my volume profile. So this is the move up that we're referring to. Now, if this was a strong move up, these aren't really long topside wicks, so it's still relatively bullish and we're gapping. But notice how volume below doesn't keep increasing with it. So the bar sizes are actually getting bigger, right? Kind of looking like a bullish, it's getting more bullish, we're gaining more ground. But volume's diminishing on the move up, which means big money stepping out. So this is mostly like, smart money stepping out. So this is what I guess you would call, let's just call it inexperienced money, keeps buying and pushing this up. And then we look at the options flow data, and we see the same story being told, that puts are being bought more across the entire market than calls. So, if you're a swing trader, then if you do buy calls here, right, be very aggressive, and it means be very careful. Like at the first sign, like this doji, this higher volume doji, it's time to exit, right? Don't push your luck. But I wouldn't even really recommend, like, if you're building your long-term portfolio, I guess, in some cases you might just keep averaging down. But At the same time, like this move seems to be short-lived using this long-term data along with what we're seeing on the chart. And that's called divergence, where price is moving up, but it should be the opposite happening. It means that the market net flow is diverging from what price is doing. And then sure enough, eventually the price has to give, and boom, we come plummeting down on SPY, right? And so that's when you can expect those big reversals to happening. You don't ever preemptively jump in. Don't try to catch a falling knife either direction, or a rising knife, I guess you could say. But as soon as you start to see weakness, as soon as you start to see an indication with price action to jump in, then you can be confident that you're going to get a big move, and that's all thanks to market divergence on higher time frames. Now, one really nice feature that I love that was added in as well in this tool is you can go up here, and if you're a big fan of anchored Vwaps, you can have auto-generated anchored Vwaps added in. If you're a fan of simple moving averages, you can pop those on the chart. Now I'm a support resistance trader, so I can use the algos to show me strong levels on SPY, which would be these dotted lines, and I can also use, and let me make this screen bigger here, and I can also use this one to show me top gamma levels, which is really nice, so I don't have to pop them on my screen. And you can see like this, it was acting as a triple top at one point here, which is really nice. And then you can even see this gamma level down here, 410, was acting as our bottom, and which means we have a lot of liquidity underneath. And the lines are lighter or darker depending on how much gamma exposure is centered around a certain level, but it's so nice to have those levels right here. I don't even need them on my chart, meaning less chart clutter. I don't really like cluttering up my charts. I like keeping them clean. Having that data here is really nice. And then so you can also turn those off by clicking that. And then the last thing I want to talk about is the momentum strategy, which you can see here when we talk about market momentum, and then also market trend. But momentum, one thing I want to be clear about is when you're trading momentum, sometimes it will work, right? Like, so if calls are the what's winning the day and you get a bearish momentum alert, you know, sometimes it can work, but I wouldn't recommend trading that. I don't really trade momentum alerts, but I have noticed that if you do trade momentum alerts, give some time. Make sure you watch the price action. Don't just jump in right away. Watch the price action. Look for two things. Make sure that, okay, if I get a call-based momentum alert, one, make sure that calls are indeed above puts. Two, know that it's typically going to be a short-term scalp, unless here, like this was a market net flow cross with a momentum alert, so that's a little bit different. But I'm talking about momentum alerts on their own. So let's talk about this one here. So, well, I wouldn't actually be like this one right here, this call one right here. You can see we still dropped a little bit, and puts were kind of fighting around each other. And that's what I mean. You still need to take price action into account. I wouldn't recommend trading it if it's against what the overall flow data is, and don't just jump right in. Make sure you watch price action and look for a level hold of some sort, and then just use that momentum as extra confirmation. And then lastly, market trend. This is kind of cool that you can do this, but if you're looking for puts, right, and like, so we see calls kind of being flat and we see puts rising, you can actually visualize trend lines, and you can see we have a trend line here on price coming down. Unfortunately, I can't draw it on here. And then we have, and actually let me take a screenshot so maybe I can draw it. And let me bring that over. And so, I mean, this isn't going to be great, but we have this trend line here, and then on our puts that are rising, we see, oops, I meant to keep that white for price, and then let me pull up, draw a red line. We could see this trend line on the net flow for puts. And when we have this trend line cross, so I drew that trend line on the net flow for puts, and I have my trend line for SPY for price. And when we see that cross, we can actually take bearish plays at that point, which is showing net flow cumulative premiums crossing the actual SPY price. And this isn't the best example. I think actually right here would maybe a better example, but I just wanted to show you how that strategy works, and it indeed is a viable strategy. It's something to watch out for. Net flow crosses net flow data on the long term, and then of course the market trend stuff is what I consider to be the most powerful strategies over the momentum stuff. Now, you could see here when we have this trend line cross of puts and SPY price, we do get a really big move down, and so that's it. That's a really powerful way to trade this as well, which is super useful. So that is how I use market net flow to complement VIX and the sectors. Now, I just kind of want to talk about if you're trading underlying securities, so you're not trading SPY and QQQ, what I recommend doing is using SPY and QQQ for your market awareness. So just have SPY and QQQ up. Doesn't matter what you're trading. You can even do this sort of setup. Like on Friday, I was waiting for a setup on DraftKings. So what I did is I had SPY and QQQ up next to it, and I was actually looking for calls based off the flow data, and I actually ended up the play ended up getting scratched because SPY and QQQ were overly bearish, and I knew that DKNG was not gonna likely push in the opposite direction as the overall market trend. So, and then when we got super sideways and choppy, it's like, okay, DKNG's play is scratched, I'm not going to take that, just going to trade SPY and QQQ, which is exactly what I did. But just wanted to show how you can use SPY and QQQ to trade underlying holdings and securities. And then lastly, I just want to give a sneak peek into next week. We're going to be talking about advanced price action concepts. So we're going to be talking about market imbalances, fair value gaps, market structure breaks on higher time frames, and then this market profile tool, which you can see here, which is a way to not to be confused with volume profile, and I do actually use them together. But what this lets you do, it lets you see where the market balance is and where imbalances are, and where we can expect levels to hold. And this is called a time price opportunity chart. Not going to get into it here, but just wanted to give you an idea of what to expect for the next video. So that being said, I really hope that you got a lot out of this video. Of course, if you have any questions, feel free to let me know in the comments, and I will talk to you guys soon.